Alright, everybody, let's start. So what I wanted to do here was just pick a turning point and examine it. Basically, this is the skill that Wyckoff had, where he would take a look at the daily chart and then the wave chart and be able to catch a turning point. So I'll examine how that's done. So this is on the left-hand side, you have the daily chart, and the right-hand side is just the wave chart. Only thing is, instead of using 5-minute bars or 15-minute bars, I just wanted to use Renko because it consolidates easier than minute charts, because the minute charts are much wider. So it's easy to see it this way, especially if you're using price and volume. If you're using price and time, then you can use minute charts. I mean, I could have minutes and all of that, but if you're using price and volume, then I think this view is pretty good. Anyway, so I'm gonna, on the left hand side is the daily, and the right hand side is the wave chart. So I'll be coordinating both of them. Here you have a turning point in that where the marker is right here. What did the market do? All it did was come down to a support area, and then there was a turning point. So we'll just examine that particular turning point. All right, let me change this. There you go. So I'll use crosshairs. So we want to see how this turn takes place. Where I have the circle, how does it take place? And I'll coordinate that with the lower time frame. All right, so now the other thing to remember is this wave down on a higher time frame is a swing down. On a lower time frame, it's not a swing, it's an entire trend. If you use 5-minute, 15-minute, whatever, it's an entire trend. On a higher time frame, it's just one swing. So when you take a look at the swing on the left-hand side on the daily, you'll match it up on the right-hand side with some type of intraday or whatever chart, 5-minute, 15-minute, hourly, 30-minute, or Renko, it doesn't matter. But the point is, you will see it in terms of a trend, meaning multiple waves up and down. And it makes sense, because lower time frame, how would a higher time frame swing look on a lower time frame? It would be an entire trend on a lower time frame. So over here, you had the turn over here. Then you had a turn over here. Right? You had turns everywhere. So basically at the top here, what you had was a climax, as indicated here on the right hand side where I have the wave chart. You had a climax. Why is it a climax? It's a climax, first of all, because it's the biggest price volume wave activity up there on top of a move. After that, you had evidence that the market couldn't go further, meaning buyers were exhausted. So when buyers are exhausted, why are they exhausted? They're exhausted because they bought so much in the climax. Climax terminated the move. Buyers are exhausted. Where's the evidence? The secondary tests. Those secondary tests are showing evidence. Look, it goes up again. First time it went up $21. Next time it went up about $7. Next time it went up $7. After that, it dropped on the biggest down wave, price volume, in 11 waves. That is the result of exhaustion. Buyers are exhausted. So that's your sign of weakness, or intraday sign of weakness, meaning on a lower time frame that causes the turning point. Anyway, so you can call it whatever you want. It's change of behavior, sign of weakness, same thing. Intraday though, all right? So they got exhausted, tested, weak, down on 11 biggest price volume on all of these waves. 11 biggest down price volume, 11 biggest wave down in terms of price volume, and all the waves. So what that did was it basically just changed trend and started creating the turning point, which eventually right here just died. Just like right here, it totally, this was the lowest price in 1, 2, 3, 4, 5, at least 6, and volume in like price volume in like 31 waves. So it's gone. Just forget about it. It's not gonna do any good. All right. Now sometimes you see many of them on the up wave, on the down wave. You don't know which ones to pick. So that's where the skill comes in. So you know which one to pick. Meaning, is it supply weak or is it demand weak, etc. I know this is demand is weak because of supply in the background and a climax. The climax followed by the sign of weakness or the change of behavior, and then the up waves right here. It's cause we call it feather's weight, as Weiss calls it, or other people call it something else. Doesn't matter. LPS, LPSY, whatever you want to call it, lack of demand or whatever. The whole thing is its weakness. That's it. It's weakness. It's a weakness of demand. What happens after the weakness of demand? Supply comes in and then the trend goes down. All right. So that's what happened. That's how this turn happened. It happened on a climax of about $21 and about 70 million shares. No. 17 times a million. So 17 million, I think, or I think 17 million. 170 million. Shit. Whatever. It's a lot of volume. I divided this by 1 times with 7 zeros. So that should be 170 million, I think. That's a lot of shares. So yeah, 170 million. Anyway, then it goes down $10 over here on 120 million shares, and then ding ding ding, and finally it's about 60 million or something like that. 60 million right here, and then it pukes. So what happens here? As it pukes, it climaxes again. This is what happens between swing points. Like if you have a swing, 2 swings, you see the points, you basically have climaxes, change of behavior, strength, weakness, etc., which causes the turning point. So you need to understand what that is. All right. So here, all of a sudden, you have a lot of price volume activity. Now this is a climax, but you don't know if it's a climax until after the tests. So as you can see, the tests here are proving 1 time, 2 time, 3 time, that there's no price volume activity here. 9, 6, 5. What is this meaning? This is price. The one below, this is volume. The one below is price or some other shit. It's actually, I get confused, but the top is price, the bottom is volume. I messed up the labels here. Anyway, so what do you see in terms of price? The waves are getting smaller. That is telling you what Wyckoff indicated was in an uptrend, when the down waves start increasing in price and volume or price and time, or the up waves decrease in price and volume, price and time, you're going to have a change in trend. That's how you detect it. You apply the same logic on the down waves. On the down waves, what can you tell in terms of price? They're shrinking. They're shrinking. All right, $16 to $9 to $10 to $5. What do you think is happening? They're shrinking. All right, so the waves in terms of price and volume, over here you have 16 followed by 2, 5, and 6. What is that? 2, 5, and 6. When this is about 3 times the biggest wave here, 6, almost 3 times. So that's telling you it's game over. But you need demand to pick up. So as supply, the waves are getting smaller, what's going on with demand? They go from these 7s and 8s to 6 to 5, all of a sudden jump 8, 5, 9. That right there is an indication that the pulling power, price pulling power, is increasing. So in a downtrend, when the up wave gets bigger in terms of price volume time, and the down waves are now getting smaller, there's going to be a change of trend. So you see this right here. This is increasing, where you have 8, 9, and 12 with a little 5 in the middle, but basically 8, 9, 12. And here you have 16, 2, 5, 6. And here you have 16, 9, 6, 5. So the up waves are increasing, the down waves are decreasing in terms of price length and volume. This is very important to understand. It's far more important than some crazy diagram that nobody uses, that's too long, that some type of crazy schema. I mean, you can use it, but I don't recommend using that phase A, B, C, D, and then trying to apply that. You're not gonna get, nothing follows that. Like, you're just force fitting. It's the trend change is indicating Wyckoff's words when he says in an up wave, the down waves get bigger in terms of price volume, or he called it distance and duration, and the up waves shorten in terms of distance and duration. In the downtrend, when the up waves increase in distance and duration, and the down waves shorten in terms of distance and duration, you have another trend change. So here you have down waves when that, when the distance and duration, or whatever distance and volume, they decrease and the up waves increase. This sets up the turn. Which turn? The one on the left that I'm showing you. So you had a climax on the daily bar, it looks like a red bar down, and you had that turning point here. And up here you had, right here, you had another turning point. Okay, so now where is it? You have the climax here, right? Now I have to put the secondary test also. So here you have the test, you have another test, from 17 to 0 to 3, it's all low volume tests. Again, the climax is also showing you low volume tests. How you know the low volume test? You look at the volume. It went from 16, and when it went down again, it went to 2. 2. From 16 to 2. Then it's a little bit more, but it's still low volume. Because remember, you're comparing to the 16, the climax, not to the wave before. So when you compare to the climax, 16 versus 2, and the next one, 16 versus 5. Clearly, these are low volume tests, being less than a third. So oh shit, I put the wrong one. You have right here the low volume test. Again, secondary test. First test this, secondary test that. Then what you have is your sign of strength up here, sign of weakness over there, and over here, this is sign of strength. So you put a change of behavior. After that, you finally have your final LPS, LPSY. That's your FW up there. FW over here is your LPS. Why is it LPS? Because it's low volume. It's definitely low price and low volume. This is the change that's creating the change. Your climaxes, your low volume testing, your sign of strength, your LPS here, climax, low volume testing, sign of weakness, LPS. That's how you know. So now that's what I wanted to teach in this lesson. And this is what you need to know. The other stuff that you see with the crazy long range with the phase A, B, C, D, it cannot be applied, like realistically speaking. It's almost impossible, like, to get all those elements and try to figure things out. Where I'm showing you clearly here the same sequences with the same behaviors initiating both a downtrend and after that an uptrend. In fact, if you want to use a daily chart, I show you on the daily chart as well how this happens. All right, so this thing goes down, 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 down. Here, the only problem here is very hard to see the wave climax, but the bar, in terms of bar volume, it's there. It just came in early, very early. This was the climax, and this is actually a change of behavior in perspective of the bar. These were the early warning signs right there, these two bars. This one was the biggest volume in 289 up bars, and this one was the biggest down volume in 462 down bars. Don't you think this is a climax followed by buying? Obviously it is, but you're not going to find this shit on the internet. Well, now you will, but anyway. So then this in terms of the bar is there, and it's telling you that it's just a matter of time where you can expect, based on the low volume testing, the volume signature expanded completely here. And then finally you had that change of behavior from a wave perspective, which was the sixth biggest, I think, volume, price volume or whatever. So here it is very clearly showing you this. It didn't show you the first part. Instead, what you say was shortening of the thrust, followed by the change of behavior, and these two seal the deal in terms of that LPS. Just go feathers way right here. This volume here is the smallest volume in 8 down waves, and these are just lasting 1 bar. This is 4. I don't remember if it's 400 million or whatever, but just use 4. It's lower than 1, 2, 3, 4, 5, everything here, and followed by the confirmation breakout right there. So you see these are the sequences of the turning point. Here it's not that evident because, you know, this was the climax. This was the was it LVT, low volume test right there. You know, how do you know it's a climax? I know it's like 61 and then went all the way up to 48. And if I shorten the waves, it's a little bit more evident, but you don't really like know for sure until this down wave here, which initiates the change of behavior or the sign of weakness. This is your sign of weakness. This is your sign of weakness. That was your pullback, and that's your downtrend. Then this came with your sign of strength or your change of behavior, followed by the feathers weight or whatever you want to call it, weakness in supply. It's best to use weakness in supply. I don't even know why I use all of these terms. It's just the Wyckoff vernacular, but literally this is nothing more than supply and demand waves. Strength and demand followed by weakness in supply, initiating the trend up. Here is like where it got really, really confusing for me. Here it's you had selling, and you had weak buying. So I understood this piece, but then these guys came off of support. So here, you know, all it did was go to a support area. So that's why it was just, okay, you know, the buying is coming in from support area. Don't mess with this. Don't mess with the bulls. Right? That's all. Same thing over and over again. You know, only thing is sometimes they're a little bit higher, sometimes they're a little bit lower. You know, like here you have a little bit higher than the former resistance area. This one is a little bit lower, you know, tags, retest, etc. You know, over here, what is this type of behavior? This is also pain because sometimes it looks like absorption off of these highs because this heavy selling here. So they have to absorb the area because there are a lot of sellers there. They can't just break right through. You know, it's just not going to happen that way. They have to absorb that selling as well as those guys that are trapped. A lot of traders were trapped here on this volume here, followed by this selling. So it gave them one opportunity to get out, almost close to it, and then finally it was willing to absorb. If it absorbs, chances are it's going to go much higher, in my opinion. But we don't know, like, because I don't like one very important fact, and that is this breakout was on the low. Like, that's not how breakouts are supposed to be. They're supposed to be mid to high range. So, but I mean, what can you say? It's absorbing this entire area. So this just, just back off and just wait for confirmation and then wait for the pullback, and that's it. All right, thank you.